Hey, what's up? What's up? So I'm very happy and grateful for the last, let's say, 2 weeks, right? I've been trading and I took 127 trade and I was able to have a win rate of 100%. Yes, it is possible, right? Um, and in today's video, I'm going to show you what is my strategy, right? So as you can see on the screen here, 127 trade with a total of 72.18 lot size, right? And 100% win rate, right? It's one of my accounts in DFTMO, right? So just to mention, I'm not a financial advisor, and also I don't promote any broker. Okay. Today's video is going to be more about educational and also of my own experience, right? So if we dive in on the chart, I've been trading a lot gold these days. Usually the pair that I trade is gold, Nasdaq, US 30, and Bitcoin. But I didn't really touch Bitcoin for a while. Why? Because I didn't really like the structure, but and also what's happening in the crypto space nowadays, right? So I was really focused on gold because I really like the structure. So let me explain to you very the basics, right? My strategy is really simple. Like I use SMC, right? Smart money concept, market structure, and price action, and also supply and demand. That's it. I don't complicate things, right? I've seen a lot of strategies, right? And with indicators, a lot of indicators. I've been trading for more than 2 years, right? And um, this is what works for me. I find one strategy, my strategy, right? How I see the market and how can I negotiate on it. So if we go really basics, so we have like three structure, market structure, right? This is a consolidation, right? So when the price range. So usually when the price it's consolidating, you want to position yourself um, here, right at the bottom, right for a long, right for a buy, and you want to position yourself for a sell, right for a short in this area, right for in a consolidation structure, right? And also why I'm showing you that is just because um, I've seen people taking trades and they position themselves here for sell, right? And here for buy because maybe they see the momentum to the upside and they want to position themselves here. To be honest, I don't trade BOS. Like I don't take trade based on break of structure, right? If you do, it's okay. But the probability that it works for me, it's really low. So that's why I don't trade BOS. I trade the retracement of that BOS. So, for example, we have a break of structure and for the consolidation, right? This is just an example, and this is really basics, right? Just for you to understand. And then, for example, you have a BOS here, right? Broke, break the structure, and then I might potentially look for the retracement for a buy. Let's say in that situation, right? So ask yourself when you take a trade, do you take your trade in that structure here for a sell or for a buy? Do you take a buy here? Okay, why I'm showing you this is just because I've seen people, yes, I understand to buy low and sell high, but they don't really understand it or they don't apply it in the real market, right? So uh, let's see other structure, right? So we have like we only have like three structure, and then of course can be complex in the real market, but it's only like three structure, right? To the downside, downtrend, right? Bearish, and then when the price is bullish, right? Creating what? Higher highs and higher lows. So this one is a uptrend, and this one is a downtrend. So I think people making mistakes on the market in the real world, right? Because this is like simple. This is just like you know me explaining this, but in the real market it's different, right? Because um, I think people when they fail or they um, they have a lot of like let's say stop loss hit, it's just because they don't recognize the structure. So if you recognize the structure that you're in, you can negotiate better in the market, right? So, for example, going down, and what is your plan is to get a sell here at the retracement, and then go down again, and then go up. You take a sell again to go here, right? Same thing to the upside or uptrend, right? You go up, you wait for the pullback, boom, get in, and then move up, and then pull back, and then move up again, right? That's the plan. That's the goal, right? So I don't take trade based on BOS here. So and also like what I want to mention is trading is rational, it's not emotional, and better you understand it, maybe better you can negotiate on it. So if we look on gold, right, this for me is, and also this is my opinion, right? This is how I see the market. This is my vision of the market. Maybe yours can be different, right? And that's okay, but I'm just showing you how I see it, all right? So gold, what we see on gold on the daily, right? I don't really go on weekly, okay, because I'm considering myself as a day trader and also taking trade. Yes, I consider myself as a day trader intraday, right? Um, but I take my position based on really low time frame, like smaller time frame. Okay, so that's why I don't really go on weekly uh, to analyze it, right? Maybe just to have a bigger picture of where we are, but that's about it. Well, gold is reaching a good area for potential moves, right? So I go on the daily, and what we see here is this demand zone got respected, right? So create a low here and then retrace just a bit higher, right, from this low, but this area became a demand zone, right? So what I mean by that is just we push to the downside and then boom to the upside, and then when we get back to this area, buyers were able to push back again the price, and then get back to this area, and buyers were able to push again the price to the upside, right? But I didn't position myself here for buy, to be honest, because we are bearish, right? I just positioned myself here for a buy when we played in this area, right? But I didn't position myself when we hit again this area for the third time, right? So, because if you look at it, we were still bearish on gold, right? So playing for me, right? For me, playing this area here, the support was a bit for me risky, let's say, for my strategy. For my strategy, so I didn't position myself here for buy, but when we went up, right? um, when we went up to this area, yeah, let's go to this area. Here, I'm gonna go on 4 hours. I really love the 4 hours, to be honest. You might have different time frame that you're looking at, and that's okay, right? So I was looking in this area for shorting gold. So I'm just gonna okay, good. Why? Because it's really simple. It's because for me, this zone is a supply zone, right? When we hit that area, we broke here and then boom, push it down, and then go up, push it down again, and then broke up to the upside. But when we broke again to the downside, we retrace, boom, push it to the downside, and then push it to the downside again. So that's why what I understand, right? So what I understand is this is a smart money concept for me is we create liquidity here, right? What I mean about liquidity is what moves the price up and down. It's money, right? It's liquidity. But me, when I say liquidity, is when we are in a consolidation, we have liquidity uh, below and above, right? When we are consolidating, right? We have liquidity of who? Usually, right? Usually retail traders, like small players in the game, because we have a lot of players in the game. We have big players and you have, like, let's say a small player, let's say, okay? So for me, when we are consolidating, so we have a lot of liquidity below and above. So it means that people are positioning themselves here, small players. This is just my opinion, right? So we have buyers here, and also we have sellers here, right? So that's why I say we have liquidity here of smaller players or whoever there is, right? And usually the market makers, right? The smart money, what I call smart money, love to wait the market to create liquidity like this, right? And then you can see, it's not always, but you can see, they pushing the price down, take liquidity, and then take liquidity to the upside too, right? In both sides. So for me here is smaller players and then big players in the game, the smart money, take that liquidity because when they're pushing the price down, tend to be the stop loss of the retail. Okay, of the retail, let's say small players, right? So even here for a sell. Okay, so hope you understand this, because if you understand this, you understand more of the market. You have a better understanding of the market because you can see on the market small players pushing themselves and also big players positioning themselves. So what I'm going to show you, it's also based on my own experience, right, in the market for 2 years. So more than 2 years. But anyways, so we have liquidity here, right? Liquidity here. So if we are able to push it up more, right? Breaking that zone here and reach this area, I wanted to position myself for a sell. And then I'm gonna see if it play out in my favor, right? Because a lot of people ask me, how do you know it's gonna go to the downside? How do you know it's gonna go to the upside? I don't know. I don't know nothing, right? It's just based on supply demand, my understanding of the market. That's it. And trading is a game of probability. So I'm not 100% sure. Nobody's 100% sure unless you are a big player in the game, right? You're a smart money and you are a market maker, right? That move the market. But if not, you don't know where the market is gonna go, right? So for me, we have liquidity here, so we might push, right? If we push enough, right? Push up enough to this area, I wanted to position myself for a sell. So let's see what's happened. So I might go on the smaller time frame after. So we hit this area, right? Like 81 here. And let's see on small time frame. Okay. To be honest, I can't remember exactly where. Okay. So okay, so night's move, yeah, I kind of remember now. So when we hit that area, right, for me was, like I said, a supply zone here on bigger time frame, and then I go on smaller time frame. That's it, and see the reaction at that level, right? That's very important. I wait to see the reaction of the price, because if we hit this area and then the next candle, for example, this candle just push to the upside, it just invalidate that zone, right? So I'm patient and I'm just waiting for the price. And we have a nice reaction on the 5 minutes here, right? Boom, a big bearish candle on the 5 minutes. So I'm just gonna remove this. So what I understand is, okay, on smaller time frame, in this area, we push the price to the downside. So if the price is gonna go up again, I didn't take this retracement, right? Push it down and then retrace and then push it to back down. I didn't take that trade. I was waiting for the price to hit that area and see the reaction, right? So I have my zone here and I'm patient. Right? I didn't take any position here, right? Why? Because on the 1 minute we have liquidity. Also have liquidity. Oh shit, sorry. So we have liquidity here and also here. So I'm just wait and look where's the money, right? The money is here. So if we are able to push it back again in that area, I might look for a sell. So let's see. And also you have to understand what session you are in, right? The Asian session, London or New York, right? Sydney, so it's Sydney and Tokyo is the Asian session, right? So you have more volatility in the London session, right? And when London and New York merge, right, overlap together, you have more volatility and also more manipulation. Okay, that's just my opinion of what I've seen for more than 2 years in market. Okay, so what time it is? So, okay. Maybe let's go on 5 minutes. It's going to be faster for you. There we go. So love it. So here, London session, right? London session open, and you see, we have what? Liquidity, right? Consolidation. We push it down, grab liquidity, and then push it up. Remember that structure. If you understand this, it's really powerful and you can position yourself with them, right? But this is on the 5 minutes, right? So bigger time frame respect more of the market structure, but smaller time frame give you more precision of what happened, right? So this is on 5 minutes, but you can also see it on a 15, 30, 1 hour, 4 hours, right? Here, you have a top here, got broken, and then play out as a low, right? A high that got broken, play out what? As a low. Boom, market structure. But also, you have a consolidation here, then we push it down, take liquidity here, and then push it up, and then clear this liquidity also. Amazing, right? So I was patient, right? I didn't take any position here because of the liquidity and what I just show you. I just show you that you can see that in the market, right? So because I understand this structure, but I didn't know that I'm gonna see it now, right? But anyways, so you see it, right? Here, same setup. And then I was waiting, what you see here, the price is getting exhausted in this area, right? I didn't position myself here. I was waiting more here, I believe, right? Because I have a 127 trades. Can't remember all of them, but yeah, here, boom, here. So what I understand the price, in a higher time frame, POI, so point of interest, right? My point of interest might be different of, other perception of POI. POI is just for me area that I want to position myself for a buy or a sell. That's it. Okay. So we were the price was exhausted to the bullish from the bullish momentum here, normal, because on the 5 minutes we're getting in that structure, right? And what structure are you? You are in that structure. So it's really simple. Like it creates this structure. So where you want to position yourself, usually, right? This is just based on market structure. Okay. You want to position yourself for a sell here if you have a confirmation, right? How you get your confirmation? Look left. Okay. And price action to reaction, the price getting exhausted, and so for me, this area was a good area for me to position myself, right? So when I look in this area, I didn't position myself, like I said, here, right? I was waiting to at the top, right? Because my entries are based on tops and bottom. So tops and bottom, and also imbalance, okay, in the market. So if you understand smart money concept, the imbalance in the market, right? So my entry is based on, I take entries based on tops, my tops, when my entries are tops, low, bottom, right? Low, high, and imbalance. And my target are also tops, low, right? Bottom, and imbalance, for example. Okay. So I'm not gonna talk about imbalance today, what it is, but anyway, so I managed to enter here for a sell, and also your profitability. It's not how you make money, right? Traders, right? You become your I don't know if I can say it in English, but rentability or profitability. Let's say profitability, right? Profitable. You're a profitable trader, right? A profitable trader has a direct um, correlation with his skills, his risk management, and also risk to reward. Okay, so yeah, if you make money with trading, um, this has a direct correlation with your skills, your risk management, how much you risk, and also your risk to reward here, risk ratio, risk, the RRR, the risk reward ratio. Okay, so here, this was kind of my setup, right? Here, and then based on market structure on the 5 minutes, right? My TP1 was here. So I like to have like on smaller time frame, TPs, and then let's say for more intraday on the 1 hour and 4 hour. That's where I get the most of my risk to reward, right? So TP1 was there, TP2 was there, and TP3 was there. So we're gonna look at the price, right? Because I don't really remember all my trades, but I remember that I took my position based on here on the 5 minutes. And my TPs are where potentially we can see reversal, right? So you see here, so we have tops, right? If I'm wrong, we can see the price, hit this area and then, uh, tops here got broken and then can play out as a support and then boom. All right. So that's why here was my TP1, TP2 was here, same thing. We have tops here and also my TP3 was here, but I like to put my TP just a bit above, right? In case that the price, for example, if I put my TP here, my TP3, let's say on 5 minutes, we go like this and then we go to the upside. So it won't trigger my TP3. So that's why I put it just a bit above, right? And for me, it would make sense. So let's see. Yeah, I hope is that right. Like I said, I can't remember of all of my trades, but there we go. So we hit TP1 on the base on the 5 minutes, right? I was if I remember right. So like I said, wow, that's amazing. Play out as I said it. Anyways, so pushing myself here, boom, push it down, hit TP1 base on 5 minutes. I'm gonna remove it with the 5 minutes time frame, and then we push it up again. And then I see the rejection again, right? You see the wick there? So that's why I might position myself again here, right? And then boom, exactly my TP2 on base with the 5 minutes, right? So this was TP1, boom, TP2, exactly. Wow, that's amazing. And you know, like I said, I don't remember exactly because I took a lot of trades, but I just put it like this for you to you know, understand why my TP are there, but I just did it like with you on this video, right? So boom, hit TP2 and then push it up, right? And after that, I don't know if this trade hit TP3, but that's amazing. You understand? Boom, TP1, boom, hit, go up, reject that zone. So we didn't create a higher high. So boom, 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 market structure, right? What is market structure is push it up, retrace, push it up again, all right? And then boom. And this move here should create a higher high, right? But here we didn't have that. We only had this. So push it up, retrace, break, retrace, and then here should push it up more, right? Of course, we kind of, you know, have a higher high, but it's a wick, right? So they push it up and then we close below. We close below this high, right? Even if it's a high, but with the wick, we close below. So it means that sellers still pushing the price down here, right? And then, oh, and then, yeah, hit TP2. Let's see what's the price did. I don't know if we went lower, but this setup would make sense. Oh yeah, I remember. Yeah, remember why? Because you see here, so I pushing myself in that area, and then we push it down, and then we retrace, and then we push it down again. But what I remember is because when I follow it after that, we kind of, you know, have a complex pullback, right? Let's say from this area, we push it up, retrace, push it up, and then potentially this move can be a pullback from the first move here, but it's kind of like a consolidation, but to the downside, right? We didn't like push it down really impulsive, the move was not impulsive to the downside. So I was like, wow. So I just BE, right? I just put my trade in BE with couple pips, in profits, and then just wait. I believe we hit TP3 on this setup. Yeah, so there we go, TP3. But like I said, my TP3 was here, and you see the reaction. You see the reaction at TP3. That's why I said I don't want to put it like really here. I like to put it just a bit above, right? Because like I said, we can, of course, here in that situation, right? We were able to reach TP3 here, but you see this area? Wow, that's amazing. That's amazing because I just do a recap, but with the replay mode, and I didn't remember, anyways. So we hit TP3 and then bounce back up, And then, like I said, same thing, consolidation, and then push it down. So take liquidity in order to go up. Same thing. So just recognize the structure and where we grab liquidity. It might help you to position yourself better in the market. So this is one of my setups, right, of the past 2 weeks. I hope you enjoy it, right? And also, like I show you my, how I see the market, my vision of the markets. I just simplify everything, right? But I think to simplify everything, I had a lot of, experience, and, I tried a lot of strategies before, but for me, I just like simple things, right? But for me to have a lot of knowledge in trading, it allowed me to just simplify it because my eyes are used to now, right? The market and where we see liquidity and when we grab liquidity. And also it allowed me to negotiate better with the market. So I hope you enjoyed this video. If you do, like it. And if you have any questions or something to say, you can write down in the comments below, and you can subscribe if you want. So see you in the next video. Peace.